directions for 8.3, when we look at it, tells us use the general ledger accounts below, and your instructor will guide you through the following example. A form to complete the post-closing trial balance is given in the working papers. Instruction number 1, prepare a post-closing trial balance for Darlene's delivery service on July 31st of the current year. Now, what we have here in our directions is all of our ledgers. When we go through and prepare a post-closing trial balance, every account that has a balance needs to be listed. And we do them in account order by our account numbers. So that means we have to have our assets, then we have our liabilities, owner's equity, revenue, expense, that order. So just to give you a heads up of what way they need to be listed. Let's see if I can split my screen well enough on this computer to have it up there. My screens did not split as nice as yours. Okay, so to prepare our post-closing trial balance, we're going to start first with the name of our business, which is Darlene's Delivery Service. Our second line is always going to be the name of our document, and that's going to be a post-closing trial balance. The third line is the date. We always prepare a post-closing trial balance on a specific date, not for a fiscal period. So this one should really be just for July 31st of the current year. Because I'm not saying this is what it was for the entire month or the entire time, just for today. So I'm going to start up here with my first account, which is cash, which is account number 110. I'm going to put in that account. I'm going to put in that cash has a debit balance of $7,350. Now, my next account is over here, which is accounts receivable Romel Woods, because that is account number 120. And accounts receivable Romel Woods has a debit balance of $372. And then I have accounts receivable Wyatt Ames. Accounts receivable Wyatt Ames has a debit balance of $88. My fourth asset account is supplies. Supplies has a balance of $250. Prepaid insurance has a debit balance of $900. Then I go to accounts payable, Colin Gas. Now accounts payable, Colin Gas has a credit balance of $975. Make sure you list it on the credit column side, not the debit column side. I have accounts payable, Grand Uniforms. They have a credit balance of $212. Darlene Wong Capital has a credit balance of $7,773. Scroll down to look at the rest of my accounts. I take a look at Darlene Wong Drawing. What is the balance of Darlene Wong Drawing, Cody? For drawing? 0. Okay. What's our balance of income summary, Miss Spouty? 0. We take a look at our account for sales. Josh, what's my balance in sales? Sales. It's right there on your screen. Nope. What's my balance of sales? 0. Okay. So if I took a look at the rest of them, if I take a look at all of my expense accounts, what is the balance of those, Bryce? 0. So our rule is for a post-closing trial balance, if it doesn't have a balance, it does not go on our post-closing trial balance. So right now, what I have is I have all of the accounts that have a balance, and you will notice that it is just my assets, liability, and owner's equity, which is also referred to as our permanent accounts. Revenue and expenses, as well as your drawing account and your income summary, are called temporary accounts. That will be on your test. Make sure you know that. So what I need to do at this point is right below Darlene Wong Capital is I'm going to go ahead and write in total. Sorry, totals. Then you take out your handy dandy calculator and you're going to go through and add up your debits and add up your credits. Please go ahead and do that and fill in your number there. Bless you. Ben, what did you get for your number? For a debit? All right. 8,960. Cole, what did you get? Yeah. Whoop, whoop. So when we take a look at that, we have our debit numbers and our credit numbers equal. That means we are good to go. We have done all of our fiscal period work correctly. We've gone through the whole entire accounting cycle. Chapters 1 through 8 is an accounting cycle. Journalize our transactions. We post our transactions. We complete our worksheet. We prepare an income statement and a balance sheet. Then we go through and journalize our adjusting and closing entries, and then we prepare a post-closing trial balance. That is an accounting cycle. Businesses do this every fiscal period. We have done it for the easiest business possible, which is a service business, operating as a sole proprietorship. Okay? What we will continue to learn is what are different things that businesses need to do within a fiscal period in order for more complicated businesses to operate. But otherwise, that is the basis of accounting to make sure businesses know if they have made or lost money. Go ahead and try that on your own. Shouldn't take you too long to roll that one through.